The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the March 9th magical Monday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that each of you are off to a great start of your day. Let's make sure that you and I, that we do all that we can do to have an extraordinary Monday. Of course, the easiest way to do that is to always remember that what's talked about is a dream. What's envisioned is exciting. Of course, what's planned becomes possible, but what is scheduled is real. And I really want to thank you for scheduling your time with me here this morning. I'm absolutely here to serve you. I'm grateful for your presence. Feel free to call in at 877-927-6648. Of course, internationally, you can also reach out to us at 727-445-1044. Remember, if you've got a question, someone else got that exact same question. So call in for them. A random act of kindness. That is the way to kickstart your Monday. It is Magical Monday. This is TFNN. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow up 80 points, about 80 points, trading at 17,934. The S&P is up 5 at 2,076. Composite up 8 points at 49.35. Russell's up about 5 points at 12.22. DAX is up 3. FTSE's down 37. Gold is up $6. Silver is flat. Light sweet crude is up 30 cents right now. Lead the charge to the upside out here. You got Regeneron Pharmaceuticals up $6 and change. Just looking for companies that are not in some kind of merger acquisition buyout. Whiting Petroleum's up about $4. Marathon Petroleum's up about $3. Wooba 58.com is up a couple of bucks out there. LinkedIn up $2 to the downside. You've got Bid Auto Holdings. That's off $5, 8%. Netflix is down $5, 1%. Wynn Resorts off about 5%. Off about 4%, 3.5% down $5. Palo Alto Networks, PANW, down 480. You've got Tesla's off about $3 out there. Let's kickstart this thing and take a look at what's going on inside of the ETF structures. Let's go take a look at what's going on inside of the QQQ ETF. As we speak right now, basically a flat session, just down just a tad, or basically at, well, it's up from the close is really what I should say. It's up from the close, a slight little gap up within the bar of Friday out here. Volume as the high was being made back here on March the 2nd, 22 million shares. And then it was was Thursday. Thursday was a huge clue, 15 million shares the upside. Second lightest volume day inside of the QQQ series. I'll get that out. For the year of 2015 out there. What does the Qs do? The Qs are known for making highs with light volume and lows with major volume out there. That is the signature pattern of the QQQ series. It has been like that for years. Nothing has changed there. We did get some volume moving to the downside here on Friday. If we take a look at levels of potential support out here, let's go take a look at both retracements as well as our Fibonacci support. Well, that is our retracements are Fibonacci support, and our TAS market profile. So here's what we know about the QQQ as we speak right now. If we take a look at just simply from the lows of January 16th to the high on that date of March the 2nd out here, from low to high, our 0.382 retracement is 105.58. That at this stage is the next target for the Qs. What the Qs were able to do on Friday is get below the TAS market profile low. That is a supply line. That is a level of support out there. That level failed. Now the question is, does that level act as resistance? That level being 107.76. If it continues to act as resistance, then that 105.58 is much more real, much more logical. That's what's going on inside inside of the QQQ ETF. If we look at the Russell 2000, the IWM, if we take a look at the IWM on Friday, it did break through its market profile low. Right now, it's trading just slightly above it. The actual bottom of that box, 121.39. You're trading at 121.63 right now. Where's the level of resistance here? I'd say it's probably about 122.15 inside of the IWM. The IWM still has not gotten back inside its old consolidation range out here. This is the consolidation, and there are several of them, depending on the time frame chart you look at. This is a consolidation that began in March of 2014. So it is basically a 1 year or just slightly less than 1 year consolidation out here. 120.58 is the magical number to be watching there. Any close below that says being on the long side of the trade would be wrong until you break back through that level. Long is certainly a trade out there. It's an option. If we take a look at the SPYs out here, the SPY out here, the SPYs, if we take a look at what it's doing, its TAS market profile box broke through that on Friday with some conviction, 188 million shares to the downside. That says that old support level should now become resistance. That, by the way, is 209.08. You are 208.09. How about that for a little dyslexia out there? So that becomes your resistance level. Where's the target for the SPYs out here? Well, if we take a look at the low from October 15th out to the high that was put in here, that was on the trading session of February 25th. Very likely the area of 200.66 becomes the range that you would be looking at. Now, the nice thing about that dead cat bounce is just simply you'll get into a set of swing points, either December 16th with 259 million, or maybe it's January 14th with 192, or maybe it's even the most recent one, February 2nd with 163 million shares. You've got some swing points down to that dead cat bounce at point 382 retracement level that would allow us to identify whether or not price is going to be able to break through that area. That is what's going on inside of the SPY out here. Let's go take a look at the Dow Diamonds, the DIA. Dow Diamonds up 83 cents right now, 864,000 shares to the upside. If we take a look at what it is doing, well, on Friday, down with 7.2 million shares out there. It broke through its TAS market profile. That's at 179.62. 179.62 should be its resistance level. You are at 179.20 as we speak right now. If in fact price stays below those old support, now new resistance levels, that says the price area of 177.87, but more likely 174.91 is in order for the Dow Diamonds. That's what's going on inside of that ETF structure. Let's go take a look at some of the sectors inside of the S&P 500. Let's take a look at them from heaviest weighted to less heavy weighted out there. The XLK, the technology sector. What did the technology sector do on Friday? 8 million shares to the downside. It made a high out here with 6.8 million shares. What else was it going against? Well, it was going against 4 and 6 million shares. It was going really into a breakout here. Where's the next level for the XLK to try to find some support? I'd have to say perhaps that little breakout, but it was only 6.7 million shares on February 12th. Nonetheless, it's an open window. That becomes a natural area of potential support, 41.88 to 42.07. Its TAS market profile box, its natural area of supply and demand, that bottom of the box, 42.49. You are trading at 42.49 as we speak right now. Any close above 42.49 brings 42.67 to about 42.79 into play out here. Where else is it that we could look for a target to the downside inside of the XLK? Well, if it's able to take out the 42-ish level, 41.89, that sets up 40.93 inside of the XLK. If we go take a look at what's going on inside the financial sector, the XLF sector out here, that says on Friday we saw kind of more of a sideways movement than anything else. Nonetheless, it was close to, it was an outside day is really what it was, because we had the high and the low of the previous day taken out. It was not a key reversal day. It is not in an extended condition. In order to have a key reversal session, market needs to be, whatever market it is, the stock, the sector, the ETF, whatever it is, it needs to be in an extended condition. I would define an extended condition as being up towards the bottom or the top of its relative strength indicator, very close to that area. That's in the 70 or the 30 level, or completing an A to B equals CD to the upside or to the downside out there. What we've had inside of the financial sector has been nothing more than a sideways move. Friday, additional sideways move. A little bit of conviction behind it, 60 million shares versus making the highs with 26 million shares, but it still did not bust to the downside. It was unable to take out its TAS market profile low. That box out there being 2402. So interestingly enough, the financials, with them being the number 2, I believe, weighting structure inside of the S&P 500, out here, have not really given any kind of a sell signal, at least not the way that I am taking a look at it with the tools that we have. Let's take a look at the healthcare sector. Also strong like bull. What did it do on Friday? Well, on Friday, moved lower with 12 million shares. That's after the prior day making high with 6 million shares. So you've got some volume picking up to the downside there. Nonetheless, price right now just resting on its point of control, the area of supply and demand, the area of buyers and sellers, where they are most comfortable, where they're just partying and hanging out. That's at a price point of 71.20. The actual low so far this morning, 71.23. In order for the XLV to start getting some movement to the downside, it's going to need to crack its support levels out here, and that's going to be $70.53 out there. So at this stage of the game, with inside the XLV, XLF, they seem to be more bullish than bearish. The XLK, no, not so much. If we take a look at the energy sector, the XLE out here, let's go take a look at it. What did the XLE do? Well, if we just simply, it's broken through a short-term trend line out here. If we take a look at from low to high, it looks like this is headed back to at least the 0.618 retracement level. That's $75.80. This is Steve Rhodes. This is TFNN. We'll be right back.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 77, S&P is up 5. Let's take a tour around the currency pairs out here for you. We'll take a look at the Euro Japanese yen. It's up as we speak right now. Of course, it's being up. And what we also have out here is, a market that's up. So you can see this currency pair here, how well it tracks the U.S. stock market. Nonetheless, what it's also doing is trading inside that swing point from January 26th out here. If we take a look at that, the top of that swing point is 133.71. The bottom, which is most likely where price is headed to, 130.15 out there. No bullish reversal signal or anything along those lines in that currency pair. The euro, as it relates to the U.S. dollar, just a slight bounce out here, just a slight pause before it continues moving down, which could take it down to 99 cents out there, 0.9905 to be exact. That is the long-term 0.786 retracement level. That should then put strength inside the U.S. dollar index. Of course, the Japanese yen versus the U.S. dollar. Let's take a look at it. It is right now trying to get back to the top of the December 8th high. That is at 121.84. If we can take out that area, that would be very bullish. This thing has just simply been trading in a sideways consolidation. I cannot tell you what it's going to do when it gets up to that level, but it looks like it wants to test that area. If we look at the Great British Pound out here, the Great British Pound, after breaking above its channel line out here, that's the red diagonal line on my screen, it has come back and tested it with a vengeance. Looked like this thing was off to the races out here, and now it's already back inside or testing the swing point low from the trading day of January 26th. The top of that swing point is 150.03. We saw price get down to 150.03 on March the 6th out there, just slightly lower today. So it's testing that swing point. There's no way for us to do volumes or anything along those lines out here. So the Great British Pound also at this stage here, even though it's just come back to that channel line, it's come back and inside that swing point. It's not looking good. There's nothing bullish that I now see when I take a look at the Great British Pound. It's just bouncing to the bounce today is nothing more than an oversold condition being worked off out there. That's what's going on there. If we go take a look at gold, we go look at that beautiful full moon initiation chart out here. The last full moon that took place last week on was a Wednesday or a Thursday out here, that gave us an initiation move to the downside. Gold right now is trading inside its swing point. That swing point is from November 7, 2014. When you trade inside a swing point, volume or not, says you can go test the swing point. Well, in this case here, because price is moving lower, that would be going down and testing the swing point low. So we cannot rule out that gold wants to get down to 1130 out here. Price moved down, tested the bottom of its descending price channel, has tested the 0.7 786 retracement level. Any clear move below Friday's lows out here, and that says 1130 is likely its target out here. At this stage of the game, I've got to go with that being the target area for Goldilocks. If we go take a look at main view, if we go take a look at silver out here, silver's up 3 pennies. Really the same kind of a setup out here. Silver is well inside the swing point here from December the 1st. That says you can go test the low. The first area of a test for silver, though, is probably going to be $15.52, give or take a few pennies. That is your 0.786 retracement. So that is likely to be tested. No bullish reversal signal yet inside of silver. And it's not unreasonable to think that silver would not go down and test $14.70 out there. If we take a look at light sweet crude, traded $49.93 out here. This has just simply been traveling sideways. So it is trying to build some kind of a base out here, or just simply work off an oversold condition from way back when price had moved down into the January 29th low of 44.37. Not a ton out here to be looking at inside of light sweet crude from the bullish standpoint. Natural gas so far off of its session lows out here, nonetheless pulling back this morning. What natural gas is doing is nothing more than just simply following its normal pattern out here. That normal pattern, see how quickly I can find it out here on my chart. Can this there? Is it there? Here it is. From the current slide, it is doing nothing more than following its seasonal type pattern out here. That seasonal pattern said that it would make a high right around the 25th or so of February and then move down into March. Take a look at this. It says it ought to just be simply chopping around here until the exact date is going to be sometime right around, let me see where I could got it over here, right around April 9th or so. So it doesn't look like natural gas will do much other than some chopping around until about the April 9th timeframe. That's assuming that this analog pattern continues to trade out there. Right now, we've got the Dow. She's up a total of 67 points. S&P is up 3. Composite off 3. Russell's up $1.70. Excuse me. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is up 79 points. S&P is up 5. Composite's up. Composite basically flat. Russell 2000 up by 2.5 points. Let's go take a look at the VIX index, see what it is doing as we speak right now. So the VIX index up about 8% or so on Friday. Right now, it's kind of flat. It's up 1%. It's up 20 cents out here. Let's take a look at it. So let me take a look at a different chart. Give me a moment here to switch to this VIX chart. So if we take a look at the VIX chart out here, the next couple of days will be pretty telling for us. As I think most of you know, I did a workshop. It was nearly 4 weeks ago, this coming Wednesday, for all of my subscribers. Now, I put together, I do a handful of workshops during the year out there. And so if you didn't get a chance to attend that workshop, come on over to the homepage at TFNN.com, sign up for my newsletter service, Mastering Probability, give you access to that and much, much more. It's a workshop. If you trade the markets, if you want to understand, if you want to have more certainty, in a market that's full of variety out there, uncertainty, really. If you're looking for ways to empower yourself so that you can make decisions as to what's going on, then you really ought to come over there. Because what I do is, I don't teach you all the math behind the VIX. If you want that, there's 2 or 3 papers out there. They're easy to get on the internet from the gentleman that actually created the index out there, and have fun with it. I teach you actionable trading ideas, ways for you to understand what the market is doing, and just simply break it down that way. So it's not like, hey, this is all about the VIX. It's not. I give you 5 actionable things to take a look at. Well, one of those actionable items, we talk about that here all the time, is that 50-day exponential moving average when we take a look at the VIX index. Now, that is priced at 1602. The VIX is trading at 1536 as we speak right now. If we see a close above that 50-day exponential moving average, 1602, doesn't have to be today. I don't expect that it'll be today. But if we do see a close above that, that's where real damage begins to be done inside the market. If you're bullish, you want to see the VIX index stay below that level, or at least test it and reject that. Now, when I'm referring to bullish, I'm also referring to not day trader type and also not long term, but basically if you were a swing trader, meaning you were looking at the daily charts out there. With regard to intermediate term time frame, your weekly, your longer term, your 401k, those are whole different time frames and whole different charts out there, monthly and weekly charts that we would look at. But on the daily basis, which is really what we're talking about as we speak right now, it's that 1602 level that you really want to keep your eyes on out there. I do believe that the VIX will get above that area. It's not a matter, and I do believe it'll do that. Well, let's just say this. If, in fact, the sellers continue to have control of the market, which they do clearly when I take a look at the New York Stock Exchange, when I take a look at the composite, and I take a look at the Dow, it could not be more clear who is in control of this game out here. That doesn't mean that they can't get overrun. Of course they can. But who is in control right now of this game is the sellers. People like to refer to that as the bears out there. So that then says that the VIX ought to be able to take out that 50-day exponential moving average, and then the sellers will have a field day. Now, I don't know if that field day is going to be one big, huge, exhaustive move, if it's going to be any move whatsoever. But if it is, it could be one big, huge, exhaustive move, which would be beautiful if that's the way that it's set up. So, I'm looking for a potential bottom to form either maybe this week or not until April. It obviously could be sometime in between, but right now I'm taking a look at those as being the two best scenarios. If we see one big huge flush, one big huge scary day, maybe even scarier than last Friday, and with more volume, then I will say, okay, it was likely this week. If we don't see that, and we just see some nice continual gradual volume moves down, bounces, moves down, counter trend rallies, then we're looking at going into that April time frame out there. So I can't say which one. I know which two it is to look at. I also know to look at that third outcome. That third outcome is what it is that it takes for the buyers to actually come back and take control of the market. We're not there, but that will also rear its head should, in fact, that take place. If we take a look at somebody had mentioned inside the den about some different divergences out there. There are plenty of divergences inside of the market out here. And inside of the market, one of those there's really two that I'll share with you. There are more than two, but there are two that I will share with you. And what we're looking at here on my chart is we're taking a look at the top portion of my chart is the S&P 500 equal weighted ETF. That's called the Guggenheim ETF, RSP. The bottom happens to be the weighted version of the which matches the S&P 500. The SPYs out here. Now, what's interesting about the equal weighted ETF is that when there are divergences, and by divergences, what I mean making lower highs, these are the line charts make it a little bit easier to take a look at. These are closes, so these are candle closes. These are not intra-session spikes or anything like that. I'm just taking a look at closes out here. And when I see divergences in closes, the essence of price, right? When I see divergences in closes, the RSP, the equal weight, tends to lead the way out there. That means that the troops are really working. It's not just the generals. It's not just the heavily weighted stocks. Well, we saw such a divergence begin to take place back on March the 2nd out there as the NASDAQ was celebrating the 55, the close above 5,000 out there. So as it was doing that, the underneath the structure of the S&P 500 was saying not so fast out there. There was another index or set of indices out here that was also doing the same kind of a thing, and that was called the small caps. That was Russell 2000. The Russell 2000 also has an equal weighted counterpart. That equal weighted counterpart, also from Guggenheim, happens to be the EWRS. Now, it's not like it's a heavily traded vehicle, but it's a great vehicle to be able to help identify what's going on inside of the IWM. And inside the IWM, as it was breaking above its December 29th high out here, what was happening inside the equal weighted structure, remember this is 2,000 issues out here. This is not 500 issues. As it was making its break above the highs, the equal weighted were saying, not so fast out there. So there are a couple of messages on top of many others, such as just simply taking a look at the simple summation index, simple price oscillator movements out there that tell you who is in control of the game out here, and that there really should be some further prices to the downside. That is the current message of the markets. That, of course, is based upon what's going on daily timeframes out here. I still believe, for example, that the January low is a low for 2015. But I will also say that if the market doesn't have this big flush down the toilet, this big scary low, this big high volume low out here, then the market probably does run lower through April. And then if it's going to run lower through April, it is going to go ahead and take out those January lows out there. So that is my triptych or my roadmap ahead of what the markets are communicating to us here on March the 9th. How about that March 9th? That's a special day for me back in 2009, because that was a day, it was March the 6th when I went to 100% long the stock market out there. So it was a scary weekend. I do remember that weekend well. And then March 9th, it was finally off to the races inside the markets. And there were messages back then similar to the things that we're taking a look at. The cool thing is, to a certain extent, there's really nothing new to teach you with regard to what goes on inside the markets. But there's a set of tools out there that take a long time to be taught. So, a little bit different thing out there. But if you can just learn this handful of tools out here, you will do just fine at reading the message of the market. So go on over, homepage at TFNN.com. Go sign up for Mastering Probability. You'll certainly get that last set of tools dealing with the VIX index, and it'll help you greatly. I promise you, you don't even have to be that technically inclined. If you're just beginning your process, it's a great place to go ahead and start. All right, back to the detail inside of the markets out here. Let's go take a look at some equities and see what they're doing out here. Let's take a look at Priceline. Priceline is off $6 right now. Leader to the downside, dollar-wise out here. If we take a look at Priceline, just really trading inside the area where it last broke out, which was on February the 19th. This broke with 2.6 million shares out there. That says that the support inside Priceline is going to be, it's got support 1 and support 2. Support 1 is 1195.36. The volume, the pullback on Friday was only 695,000 shares, so it's pulling back into a breakout with light volume. Nonetheless, that 1195.36 has not been tested. If, in fact, it does get tested and rejected, then that becomes a pretty decent level of support. Any close below that, you're inside that large gap, and that says you can get down and test the 1129 area. That is what's going on inside of Priceline. Let's go take a look at Netflix. You've got Netflix, and we'll take a look at some of the stocks inside of the Dow, because you got the Dow up 92 points. So taking back nearly a third of the losses on Friday. But again, that price oscillated well below zero. But let's take a look at Netflix. Netflix right now trading below its TAS market profile support level. It actually cracked through there, broke through it, which was 457.13 on Friday. Volume on Friday, 1.8 million shares to the downside. Now, in the case of Netflix, it also has a breakout area with volume of 9 million shares. So thus far, it's just pulling back with light volume, but it is way away from that price level of 401.87. You are at 445.86 out there. So Netflix could easily be headed back to that 401.87. And if it can break 401.87, that says the 348-ish area becomes its target. That is on NFLX. Now, let's go over. Let's go see what's going on inside of the Dow here. So if we take a look at all 30 issues, right now to the downside, we have 2, 4, 5. We've got Intel leading the charge to the downside, dollar-wise. And percentage-wise, you've got Merck, American Express, and Pfizer. Microsoft is flat. AT&T is flat out there. Otherwise, the rest of the equities. And it is United Technologies that lead the charge the upside, which is the 7th weighting inside of the Dow. Well, let's go take a look at the 7th weighting inside of the Dow and see what it is doing out here. If we take a look at Friday's action, 3.6 million shares to the downside. It made a high with 4 million shares. So inside of United Technologies out here, not too shabby. What it also did on Friday was it broke through the TAS market profile low. That's the support level, 120.36. Right now, it's moved up into a couple of moving averages out here in the 121 level. If United Technologies can get its act together, it would actually move up to about the 122.92 area. From the so-called seller in control, bearish side, it needs to get back below 120.36. Let's take a look at let's go take a look at Intel, see what Intel is doing. Intel is like the 26 weighting inside of the Dow. If we take a look at it, Intel headed after its swing point. 32.61 from February 3rd. That had 36 million shares. Intel's got pretty decent volume as we speak right now. It's got 8.7 million shares in an hour and about 15 minutes or so of trading. So my math says, yeah, that thing is coming back with volume. If, in fact, that gets taken out, that sets up a new A to B equals CD to the downside in Intel. And that A to B equals CD, let's go see what that price projection looks like. That'll get you back to the recent lows out here. We'll go check that out in a moment. Your 1-to-1 takes you all the way down to, how about that, to the low of October 15th. That had 92 million shares out there. That might set up a nice little consolidation range for Intel. 32.61 being the number, it looks like it's got the volume. That's what you'd want to be watching for there. Also to the downside, let's take a look at it. Merck, MRK is the ticker symbol. That is the 22nd weighting inside of the Dow. If we take a look at it, moving down on Friday with about 11 million shares out there, that 11 million shares going into 13 million shares. That's the swing point that is being tested as we speak right now. That is from the trading day of December the 17th. That price point, by the way, $56.56 out there. You're at $56.60 as we speak, or $56.57 as we speak right now. You're coming back with what would look like similar to lightish type volume. But if it does break through that, that would set up a move down to the October 16th level, anywhere between 52.49 and 54.09, and that is on Merck. You've got Boeing dollar-wise to the upside. Boeing as the number 5 weighting structure inside of the Dow. We take a look at Boeing on Friday. No real damage. Moving lower, 3.5 million shares after making a high with 9 million shares. Not able to even get back to its TAS market profile resistance level. It says Boeing could easily go test that high from February 20th, which is 158.83. It's trading right now inside of that swing point. That is its message. To wrap this up, let's go take a look at Chevron, up $1.80, up 1 7/10% out here. What do we know about Chevron? Chevron got back and tested the swing point that had. So Chevron's got a rejection of its January 30th swing point. That was 20 million shares. It tested the high of 103.28 by getting down to 103.17 and closing at 103.55 with only 7 million shares going against 20 million shares. That is the reason you are seeing Chevron trade higher today. It was unable to bust it down. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 107, S&P's up 7, Composites up a point, and Russell's up 3.5. So it's really the Dow that is motoring along. I'll show you this cool chart out here. We've taken a look at it before. Now, this happens to be the daily chart. So if you're watching this on Tiger TV, hope that you are. If you're listening on the radio or your mobile device, thanks so much for doing that. Don't forget, you can come over to the homepage at TFNN.com. You can go to Channel 10 for the 10 o'clock show and Channel 9 for the 9 o'clock show on Tiger TV, and you can catch the archive, and you'll be able to take a look at this chart that we're looking at. Now, the horizontal lines going across my screen out here, these are the horizontal trading range boundary lines. These are the lines that are automatically calculated. The guys over at Traders Formula Consulting. If you're an eSignal user, go on over and check out their time-sharing approach that they use to great tools and indicators out there, this being one of them. And it works on all different charts out there. So it works on stocks, commodities, works on the whole thing, depending on what time frame it is that you want to trade on. Now, these are great boundary lines. Now, blue lines happen to be daily. Green lines are weekly. The red lines happen to be monthly out here on my screen. Now, these happen to be just natural areas of support and resistance. So it's really great to help you understand what's going on inside a market. If we take a look at the Dow, this is the Dow out here. If we take a look at it, the actual monthly primary trading range boundary line, horizontal trading range boundary line, the price point on it was 17,853.80. The actual close on Friday was 17,856. That was after getting down to 17,825. Now, these lines that we're looking at, let me see if I can do this here. The actual primary numbers that were created. See this big dashed line down here at about 10,357. That's one of the ranges that was actually used out here. I can't see real quickly where the next one might have been up at the 12,000 level. So, but once this identifies your primary 2 or 3 ranges out there, then you're just simply adding that number and to create the different levels. That basically building a house. And so what's interesting is what I'm saying out here is that the support level of 17,853 had nothing to do with where price closed on Friday. Price closed on Friday because of just that natural area of support. So if the Dow is going to continue to move lower, right now all we've got is a counter trend bounce that's in place here. That's going to be really your key level, that 17,853. And if price breaks below that, it says that the next move down is probably the 17,492 level, where it will run into a monthly level of support. What's also interesting, if I just simply go from the swing point low back on February 2nd to the high out here on March the 3rd, 17,515 is your 0.618 retracement area. So I like that. That says that's probably where we ought to look at the support. Now, the reason why I say that this is still a counter trend rally, nothing more than coming over and taking a look at we know that the Dow got down to a level of support on a monthly chart out here. We also know that right now still price or the price oscillator still below zero. We're just getting what is basically a natural level of support that has held its strong support because it's monthly, and we'll see if in fact over the next couple of days whether that gets taken out. If it does get taken out, then you know what the move to the downside price projection is. Likewise, if in fact that level of support was so strong that it says I'm not going down below that, we'll see the price oscillator get above zero out there, and then that'll be a whole different message. But we are a ways away from that. So that's what's going on inside of the. No, I didn't do that good. Thought I deleted that chart. I don't want to delete that chart. I just wanted to minimize that chart. So the other thing to be watching for today, certainly in tomorrow, is that 1602 level inside of the VIX index. Folks, have a great Monday. Stay tuned. Our man Basil Chapman is up next. We got Larry Pesavento. We've got Daryl Martin, David White, the Tom O'Brien Show. So have a great day. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.